Namaste friends, welcome to Gyanved channel. As usual, we have come up with a new video for you on the digital or the technology type of mutual funds. If anyone is new to the channel, request you to please subscribe, like, share, and please don't forget to press the bell icon so you'll get notification for our new videos in the investment area. Today we are going to see a completely new type of mutual fund for the growing India. So this is, you can say, basically a technological field, and you may get a better returns on a long term. So this category is for digital technology. So let's say how these funds can help you to grow your funds and increase your returns. Friends, you must have learned about the sectoral or thematic funds. Let's see what kind of themes or sectors we have. So we have infrastructure, pharma, technology, consumption, energy, ESG, MNC, or PSU. There are many more such type of funds. So what is speciality of these funds? The fund houses or the mutual fund schemes, they try to find the best stocks in that category, and they are focused to invest in the same theme line. Normally they don't breach this line and have your investment in that bucket only. Whenever anyone wants to select any sectoral or thematic fund, he should consider few points before investing. He should understand that these kind of funds have a dependency on that specific sector. The economic condition, sometimes what happens, as we are saying currently, FMCG sector is not performing or outperforming, we can say. So even though the economy or the market is performing well, this sector may or may not perform. Also, some of the sectors may have a cyclical performance. Let's see, if you invest a sugar industry stocks, they may not be up or going high year around. So there will be certain times these stocks will perform well, and sometimes they will be in the consolidated phase. Also, there is an exposure limit you need to consider that will be considered in this type of funds. Also, there is an investment risk. As I mentioned some time back, FMCG funds are not performing well even though the market, Sensex or Nifty, are touching new high. So let's take a look at the digital or the technology sector. So these type of funds invest in most of the stocks which belong to the information technology field. It can be IT infrastructure companies. There can be a business process management or BPO businesses. Also, these sectors nowadays is investing lot of things on the robotics and automation also. You must have already learned about few key players in this sector. Let's talk about the Indian market. You know about the Infosys, Tata Consultancy Services, HCL Technologies, then Wipro, Tech Mahindra. These are considered as few top Indian companies in this sector. So before investing, you should know how these companies make money or what are the business opportunities this company consider for their business. So one thing is that they are into the consulting business. They provide consulting across the world. Then they will have the software solutions. It could be a product, software product, or software services also. They can have the customer system maintenance, their software or the IT department maintenance. Also, they will have different types of services in the software industry. Also, there can be a business process services like I mentioned, BPO, BPM, etc. So these stocks or this sector invest in such stocks. So whenever you invest in them, there could be certain risk factors you need to highlight. So like, if we consider specifically these digital or sectoral funds, these comes under very high risk. It is not because of the type of stocks, but because of the limitations in which type of stocks your fund is invested. But same time, these funds tend to have the higher return on the long term. So if you consider the digital technology funds or the specific stocks in India, what are the key drivers? How you will ensure that their business is growing. So you can say we are one of the youngest population in the world in India. Then we have many outsourcing opportunities coming across the world. So you can say the cost of employment is comparatively less in India. So there is good number of human resource available. Also, the Indian companies are providing lots of innovation. So their innovative solutions are grabbing most of the market share across the world. Also, India has abundance of the talent availability. We have so many graduate talented people who are helping in this industry. So little earlier we discussed few of the key players in this sector, but there are few new players also. They are not completely into IT, but they are impacting in this sector tragic. So IRCT is one of such example. This is not into IT services, but you can see how your counter booking has changed into an online booking. So this is completely changing the way of businesses. Also InfoAge, you can see the Naukri.com business. So they also have completely new ideas when they launched their business in the market. Also Happiest Mind, you must have heard this name recently. You have Nureka, which has the new recent IPO. So the digital or the technology sectoral funds make investment in such type of stocks. But there can be some cautious points you need to be aware of. Let's say if the complete sector is not performing well, your mutual fund may not be performing well. Also, in case there is a recession time, suppose the global economy is in the downturn. We had such cases in past like 2008. Also, lots of software or the technology business is dependent on the US and European market conditions. If there is any recession in United States, we can say the software business or the technology business can be a down. Also, we need to be aware of the demand supply balance. Sometimes what happens, you may have lots of supply, but there is no demand in the market. So the growth may get reduced in this field. Also, the cost factor in India. Slowly we are saying the employment cost is going up in India. So it may happen after some time we may not get cheap employees in India. Some of these digital or technology funds, they not only invest in the Indian stocks, but they invest in the stocks across the world. Like they pick the best stocks from North America, Europe region, they have South America region, China, Middle East, and Asia. Also, they have lots of stocks in the Indian domestic market. Also, in Australia, also there are many companies where these companies invest. So when we say the stocks outside India, so there can be investment in the companies like Accenture, there is Microsoft, Amazon, Apple. These are the companies which have provided a huge returns over the time. So some of these digital or technology funds make investment in such funds also. If you want to invest in such type of funds, there are two types of choices. One thing, you have an ETFs which have like a standard or predefined percentage of allocation in each of the stocks, or there can be mutual funds which can have a dynamic allocation as per the funds manager. So let's see, we have Aditya Birla Sun Life Digital India Fund, then we have Franklin India Technology Fund, we have ICICI Prudential Technology Funds, also we have SBI Technology Opportunities Fund. The last one in this category is Tata Digital India Funds. So, so all these funds have performed very well in past few years. So let's take, before investing, we should take a look at the past performance of these funds also. So I have shown here a 5-year chart for these funds. So these funds, you can see the range could be around 180 to 230%. So look here, in this category, you can see Aditya Birla Digital Funds has given 235% return in last 5 years. Also ICICI Prudential Team 256%. So these funds are giving one of the highest returns across the mutual funds. So now if you are thinking to start investment in such funds, you need to consider few points. First, you should match your risk ability. How much risk you can take in case there is a volatility or downturn in the market, and how long you can invest. Also, you should take help of the investment advisor, or you should have your own research before picking the right fund for the right time. It is best to start an SIP in such type of funds rather than lump sum. But if you have lump sum amount right now, what you should do? Ideally, you should invest them first in a liquid or the debt funds, and over the time in next 18 to 24 months, you should gradually invest as a STP mode. Also, you should have enough diversification. So you may want to choose multiple funds. We will have another video on this one, and in iBox also you can see there are links to the other videos in this area. Also, you should decide your investment horizon, how long you should be able to keep your investment to grow. When you want to invest in these funds, some risk factors also you should think of, like global economy. If there is any downturn or recession in the global economy, these funds will get impacted. Also, the market conditions also will impact. There will be a margin pressure on these companies always. Currently, these companies are having good revenue in India and profit also because the USD to INR rate is high. It's 75 plus now. But in case this rate goes down, their profit margin will hit. So you need to consider these factors also. Please don't forget to subscribe to Gyanveda channel. Also like it, share it with your friends. Also don't forget to press the bell icon. Also, this information is just for the educational purpose. If you want to take any decision, kindly take advice from your financial advisor. Thank you. Namaste.